Bring us up to date on where we stand now and what may happen next with Tesla.
Yeah, so the latest that's happened is the board is going to meet with advisors next week to kind of figure out what they should do next. This is a bit routine. Whenever there's a leveraged buyout plan or an offer to buy a company, the board has to make sure that the interests of shareholders are represented, that whatever price, whatever structure of the deal is really in the best interest of the stockholders of the company and not just management. And in this case, they're in a bit of a precarious position because they have a very charismatic CEO who happens to really hate being the CEO of a public company. He doesn't like short sellers, he doesn't like the scrutiny of the markets, and that's why he wants to go private. They have to make sure that whatever offer comes in, that being the board, is really in the best interest of shareholders. And I can tell you, $420 a share is not going to do it. There are a lot of long holders who think this company's worth $570 or more. So they're going to have to do better than that.
So David mentioned that this is partly routine. But Steve Kaplan, I think you know nothing is routine when it comes to Tesla. You've been following buyouts, you've been following M&A, you've been following corporate governance for a long time. What do you make of this, and what needs to happen next, and what may happen next?
Great questions, and great to see you, or at least talk to you, Jason. This is really unusual. It's not exactly a leveraged buyout. We don't know exactly what it is. So first of all, it's very large. It's $70 billion. It would make it, as a dollar amount, the largest buyout ever. Second of all, what's really, unusual about this is that the company is cash flow negative. Most times when you see a buyout, the company is generating a lot of cash. That allows you to borrow money and buy out the public shareholders. That was the case of Dell a few years ago, as the case of R.J. Nabisco, way back in the 80s. Here he's cash flow negative, so where he's going to come up with $50 billion, which is about what he's going to need to do this, because insiders hold somewhere around $20 billion, so he's going to need $50 billion to get this done if it's at 420, which it may or may not be. So I think the big question here, which everybody's asking, is where is the money coming from? It's probably going to have to be, some big equity checks, and we don't know where those are coming from.
Well, I'm glad you mentioned the big equity checks, because some of our reporting this week here at Bloomberg pointed out that SoftBank was one of the companies that had at least preliminary conversations with Elon Musk about a potential go private transaction. Ed Hammond was out in Kansas City earlier this week, and spoke with SoftBank COO Marcelo Claure about whether SoftBank might be interested in this.
We wouldn't know particularly if something ever happened with Elon or not, so we wouldn't comment anyway. But if there's a deal going on, there's a chance that we are going to be informed, or we're going to be part of the conversation.
So David Welch, tell us what the rest of the car industry is saying about this, and what it may mean for other big automakers.
Well, Tesla is a pariah with the rest of the car companies, because most people at the big established car makers kind of think Elon Musk has always gotten a free pass. He misses production targets, which, because their cash flow relies on them getting up to full production, means he inevitably falls short of the guidance he gives, unofficial guidance on financials. So, for example, he says he's going to be cash flow positive in the second half. Well, you got to get production up. And so they look at him as kind of this guy who, because he's making electric cars, just doesn't get the same kind of scrutiny. Other than that, they're all kind of watching to see what happens next with this company. And they don't really, it doesn't really affect them, other than, hey, what's going to happen to our big competitor going forward.